All right, so we're going to record today's lesson. I'll record it. It's still going to show up as, you guys chat will be on the side. So we're going to actually record the room and what's broadcasted in the room. So be careful about what you say. It's going to be recorded indefinitely. Somebody might see it. I'll have to do the same, of course. And what we're going to do is we're going to go through the rules and the trading plan first. Simple rules, the simple version. And then we're going to look at charts, and we're going to go through all the rules, and we're going to talk about easy trades, management, and what trades to avoid and why. Red usually means stop, doesn't it? Green means go, red means stop. I think in every country on the planet. So that's why I have the color scheme. The stop going long or short if you have a termination condition is the rules. You want the triggers and fibs to be in your direction. You want to make sure you don't hit something that causes you to stop going in that direction. And then you want to enter and you want to go when you have triggers and fibs and or mid bands and one-to-ones together. So that's the short version. Let me show you where it is in the trading plan. In the trading plan, on page 2, just so you guys know where this is, since we're going through this real quick. In page 2, I want to go through the links that are on there. Number 1, disclaimers. Here, I'll give you a disclaimer real quick. In link number 2 on page 2, this is where you right click and you can open this up, and it will tell you how much money does it cost to trade a particular market over at NinjaTrader. So for example, when we're looking at E-mini S&P futures, the cost or the amount of money that you must have in your account is $500. If you're going to start off on a micro S&P, you only have to have $50 in your account to put on one contract. Now, what I say in the plan is you can't just have 500, because if you take a loss, you're going to lose, and you have to wire more money. Most traders trade with at least 3 to 5 times minimum required capital, which means realistically you need at least $2,500 per one S&P contract. I would say even more. And then look, our goal, and I'm going to prove to you today you can reach the goal. I promise you by the end of today, you will guarantee yourself you can reach this $400 goal every day. So it's going to be a big day for everybody. This is the objective, because again, if you don't have an objective, you're never going to reach it. The objective is, first and foremost, you will start trading with a simulator, and you have to guarantee yourself you're going to make $400 a day. Only after you've guaranteed yourself you can make money every day, what? By following the rules. Then you put money in your account or you start trading live. And if for some reason it's not working out, don't blow out 50 grand like some crazy people you see on the internet. Just don't do it. Lose a little bit, go back to simulator, trade a micro contract with $50, and make sure you can at least do it live before you start ramping up the number of contracts. Just common sense stuff. Disclaimer, you guys will pause the video later and read that if you really want it. The lawyers love when I put a disclaimer on there when we talk about things. When you're ready to trade live money, you should be really confident. I'm going to make this really quick. On page 2, you're going to have a spreadsheet, and you can right click here and open up in a new link this spreadsheet. Now, this is my spreadsheet. You can't have my spreadsheet, so you're going to have to download this for yourself. Here's a little link that says how to save the sheet. And it's really simple. You're just going to go to File, and you're going to go to Download. You're going to download your own copy so you can have your own copy. On this spreadsheet, there's a lot of really powerful things. What do you need to write on each chart for the class so I know what you were thinking? Which this is a real big one, guys. You need to be able to articulate why you were going to be selling Fibonacci resistance. And almost every mistake that's made with a trader is they either don't have the right entry area, they don't have the right rules, their conditions on their larger charts, or worst case scenario, they've run into something that causes them to lose. So on this spreadsheet, you'll have a lot of, I made short little videos of a lot of people's things that they do wrong, study pictures, just basic good study pictures that we've had for over the years, like divergence. I'll give you a quick example. Because, again, when you're, and this will go with the lesson that we're learning today. Sometimes you're going to have a divergence before a trend trade at your fibs and triggers that you're going to have to ignore. And the very simple, very easy condition is, number one, the triggers are past the fibs. And number two, all of your triggers are really strong. So you're not going to get out of that trade. You're going to make them come get your money, because most of the time it will continue up, which it did actually in this case. So look at your chart on the left, because we're about to do this and we're going to go through a lot of examples, and you have to know this. Super, super, super strong triggers on all charts. You're going to do the trade anyway, with divergence even. And it's the only exception really for divergence ahead of your position. What normally will happen is if your large chart triggers are together, meaning we use the term weak, or small triggers inside of the large triggers. When you get divergence, which looks identical to the other chart, doesn't it? The 5-1 chart, almost identical. Blue fibs with a divergence, what do? One of them you hang on, and then when the large chart triggers are weak, you get out. So you'd be in, and then you'd be right back out again after divergence. Everybody understand that? If you don't look at your large chart and attach some meaning to what it's telling you, you're going to end up making a lot of mistakes and taking a lot of losers that you shouldn't take. So we'll go through a bunch of examples of that as we go. Yeah, that's it. It's weaker and they're inside, so you have to respect the divergence as it says in the plan. So look, here's the plan. And I've worked really hard over the years. This is our 23rd year of doing this. And we've always either traded from the fibs or, with the triggers crossing our direction. It's pretty much been, I'll show you the old pictures, but there's no need. So the concept is that the 14-2 large and small triggers are going to be really strong. So here, I'll show you the picture. And you guys have seen this picture about 8,000 times, of course. But when we say strong triggers, we're talking about the small triggers going up and physically above the large, or the smalls going down, physically below the large going down. Everybody okay with that? And then when they come together, this is what we call a weakening look. And this is the time where anything can happen. And that's why, just like that last picture, when they come to, if they're strong, you ignore divergence, it's going to keep going. If they're weak and inside of each other, you pay attention to it because the market's going to reverse. Very simple. So again, strong triggers, and essentially, all the trades are the same. There's only a couple different minor variations between this one and this one. On this top trade, it's all three charts are perfect. And again, I'll show you real quick from the plan what the picture looks like. For a long trade, every trigger line is going up and they're all green and everything is strong. And that's the time where you've decided you're going to take a trade. And on the 5-1 chart, every trade's going to look the same. But you have to think about what you're going to do when you're going to get into a trade. Remember what I just told you? If all the trigger lines are this strong, you're not going to worry about anything that happens up here. You're going to take the trade and hang on for dear life and hope to goodness that it works. Got that? Pretty easy, right? So it's so strong that you don't even have to really think about much. And the short version of this trade is the exact same thing. Everything is going down so strong that when it pulls back, and again, look, we go through these pictures in class a lot, don't we? Strong triggers up. The trade setup itself, the entry, because this is where a lot of people, they have the question of where do I get in? We're trying to buy a pullback into the support and the trigger lines when they're together. See that yellow box? So first we define the condition trending up. Secondly, we define the entry area as fibs and triggers coming together, or all the supports inside of the triggers. We will do the same thing for short trades, meaning when the market's going down and all of the triggers are going down, we're going to then say to ourselves, if the market retraces back up into the triggers and there is resistance inside of those triggers, we're going to enter at resistance. Does everybody understand that? So the idea is we're going to get in somewhere inside of the triggers, give or take a tick or two, but at support or resistance. Without the pullback, you don't have the ability to control your risk. And this is where a lot of new users tend to just jump in, and then they're like, oh my goodness, I jumped in too early. And we usually go through a lot of those pictures. Let me get, again, we'll keep it in the plan here. So again, pretty easy, right? Everything's going your way. And this is where a lot of people have their issues right here. And again, we looked at a chart from somebody earlier this morning, and they did not recognize, yet again, the termination condition, and it's fatal every time. So let me open up just a few of these here, and then you guys can go through and we'll study these. But, again, just a quick snapshot, and then we'll look at charts. Remember the concept, weak triggers? Well, when we get weak triggers plus divergence at fibs, we're going to stop going long. Does that make sense? When we get weak triggers and we're at Fibonacci resistance with divergence, we're no longer going to go long because we're not going to be able to have the odds in our favor. Which you must learn this look, because divergence at fibs is the #1 killer of the trend. Period. And it's not that it can't break the fibs up at the top, but it has to break the fibs in order to keep going. If it doesn't, it's going to be the top, and then the market's going to go the other way. The second termination condition is the exact same thing in reverse. Weak triggers inside of each other tells us watch out. And if we get to fibs and have divergence on our small chart, even one divergence will do it, but two really does it, you're going to stop going short or you will lose your money. Everybody understand that? It's horrifically important that you know when to stop. And you don't even have to guess. I've got pictures of all of them for you. Now, this is a little bit more advanced. Let's look at it. Remember what we said about strong triggers? We want strong triggers. But there's a two-phase approach. Like I said, the market doesn't always stop at fibs. So when you reach the blue fibs, hopefully you're short and making a bunch of money. You're going to stop going short when you reach the blue fibs. If the trigger lines sustain their strength and get beyond the fibs, you're going to keep going short. So again, you don't always, the fibs don't always stop the market, but when the triggers are strong, usually it'll keep going. And then when it's beyond, you can usually find some other trades along the way. Now, one of the other concepts that we're going to introduce here is this pivot stop out. Whenever you have a divergence low, which creates the cyan and the magenta lines, when price reaches that prior low, basically it's a double bottom. If you get back above the cyan low, you can't go short because it doesn't work very consistently. And you're going to see the same thing in the next termination condition because we go through this one a lot too. If you reach red Fibonacci resistance, that's enough. But if you throw in some yellow dots, it's a lot more powerful. So if you were going long with the fibs and triggers, hopefully, you would exit at the fibs and you would wait for them to break. If they don't break, you can't go long anymore. That's why you pay for software. Now, if the market's going down and you reach blue Fibonacci support and a prior divergence low, if the triggers don't break through it and they change colors, then it's going to go the other way. So it's not go short or go long. It's stop going long, stop going short in the beginning. Do you guys understand that? Because you're trend trading. You're trading with the trend until it ends. And when we talk about our 3 rules, again, I think that this makes a lot of sense, right? Strong triggers with you. Once you reach a spot that's supposed to make the market reverse or potentially reverse, you stop taking trend trades. And if you don't have that, then you can take a trend trade. All right, so again, the second trade is pretty much the same thing. Fibs and triggers agree with the trade. This one gives you a little bit more leeway, where if one of the 2 triggers, you don't have to have all 3 charts super strong. The charts both have to be trending up or down, or you have to be at a top or a bottom. But this is where we try to use one of the 2 triggers at a fib in order to take a buy or sell signal. So again, it's the same trade, but it's not as stringent as the first one, which is all 3 charts. So it's technically the same trade, just, you're a little bit more nimble at key spots or breakouts or strong trending markets to use your software to your advantage. And if you need some reminders on these, there's in-depth videos on the first trade and the second trade, which will show you a lot of examples. So these 2 videos in the plan will reinforce the conditions. And again, same exact termination spots, same 7 conditions, which will stop the market. Okay? Everybody all right with that? We're not going through them again. And then there's one more trade that you're going to get, and you're going to see a lot, and usually it's after divergence. And usually divergence will cause this trade to happen. So you'll get some type of divergence, and then you're going to stop out a prior low or reach fibs and triggers past a divergence low, and we're going to use that look as a trend trade, which it is a trend trade. Can we just call it a trend trade and make it easy? Because it has to be with the trend. So you only have 3 different looks: a pivot stop out at fibs and triggers, or just trend. Now, let's go through and let's take a look at charts, because you have to see it to believe it, and it has to make sense to you. So I've done something which I think is going to be a really advantageous lesson. I haven't been through these yet, but I recorded them yesterday. One of the key concepts or the key things that you guys will be doing is market replay. And when I say market replay, it's called studying. It's like when you went to college. If you went to college, you didn't go to the class and then you knew everything, right? I think the formula for college, so they told me, I didn't finish, truth be told. I did about 6 years and got 2 years worth of credit, but anyway, doesn't matter. We have pretty lines on our charts now. 1 hour of class equals at least 2 to 3 hours of study. So in your little spreadsheet, there's a link up at the top. I'll show you where it is because somebody asked me this yesterday. There's a little video that gives you step-by-step instructions how to do market replay on Ninja 7 or Ninja 8. Everybody know where these are in your spreadsheet? You're going to spend more time with this than you will with the real market. And the benefit of market replay is you can see thousands of repetitions because you have to get comfortable. If you're not comfortable with what you're doing, you're never going to be able to trade successfully live. Can we pretty much agree to that one? It's just not gonna, you're not gonna be successful if you're not comfortable. So what I've done, and we'll see how this works out, I think it's going to work out really well. I've recorded 2 charts for you. I've recorded the 14-2 chart and the 5-1 chart. And what we're going to do is we're going to walk forward. And the reason I did it in Camtasia, look, this is what market replay looks like, when you're going super, super, super fast. But I recorded it at 50 times speed, and the program is called Camtasia if you guys want to record your own. And I just set up these 2 charts and I put it on 50 times speed yesterday and I just let it go. So I downloaded the data and I let it go so we could come in and have some stuff to do today. So this is from, what day is this? August 16th going into August 17th. Okay, so this is how you study history. Now, what I want to do with you is I want to walk you through it myself first. And I'm going to walk you through it step by step. I'm going to show you where the trades are. I'm going to show you the good, the bad, and the ugly. And then you'll be able to take this information and do your own study work. Instead of just fumbling around doing the wrong trade for a week and then wondering why you're not so great at day trading, we'll give you some really focused study work. So let's go forward in time and we'll talk about what's happening on the charts. What's the first thing that you see over here on your 5-1 chart? I mean, this is really obvious, isn't it? Divergence at fibs, the party's over. So you're not looking for long trades right off the bat, are you? I'm going to move this around a little bit, but pivot stop out, red fibs. And again, if you try to go long after that, you're going to lose. In actuality, overnight, this was your trade, long. Blue fibs with the triggers up, that's the trade you want to take long to get up to resistance. Now, we weren't here for that, so we're going to go forward. All right, and I'm just going to do this. Look, I'm going to kind of fast forward it a little bit so we can get to the spots to talk about. And again, do you see what happened after divergence at fibs? No long trade is going to be successful. If it is, you're getting lucky, and we don't want to get lucky. Now, every trade that you do is going to have the same thing at the same spot. It's going to have this. It's going to look just like this, almost without question. No divergence up here, and you're going to buy at the fibs and the triggers. So I just wanted you to see what a trade looks like. You see it? No divergence up top, buying at the fibs and triggers. This is going to make you money immediately. You ready? You just have to get comfortable taking the trades. And, somebody sent me a cute email this morning. They're like, well, a lot of the times the trade rules aren't true. How do I take advantage of those times? And the answer is you don't. If the rules aren't true, it's not your trade. Does everybody understand that? It's hard to believe it, but you're not going to get paid every minute of the day. I know it's disappointing, but all right, let's go forward. And again, look, fibs hold at the top. And again, this is one that suckers a lot of people in. Do you want to go short at the fibs when the triggers are up? Not for the trade rules. You see that? We don't want to go short at the fibs. And again, there's some other ways you can go short, but this isn't one of them. So this is not your trade. And this is where people get frustrated. They're like, well, I knew it was going down. You know, once you get to that point, maybe you can, but we're only doing trades with triggers, with fibs, no exceptions. So let's just roll forward until we get one. And again, I want you to think about what's happening on your large chart. Triggers are up, but they're not really strong, right? So we had a prevailing uptrend and the triggers rolled up, at least the small triggers. You see this right here on the left? It's not a great look because the smalls are below the large, but they're both up. So you have to go into a trade and you have to ask yourself the same question every single time. Did you have divergence before you pulled back to your fibs and triggers? The answer is no, because there's no negative number. Does everybody understand the trade setup? Fibs, blue fibs with green triggers with a green background with no divergence ahead of it. Everybody give me a Y in the room if you understand it. That's your trade. Period. Now, the only thing that you have to wonder about now is not whether your trade is here, but how far are you going to go? Right? Are you going to hold on for the mother lode of all big trades, or looking at your large chart, do you think there's a potential that you're not going to get very much? Not very much, right? Because if it was green and everything was going up, you'd get a lot more. But because it's not, you're not going to get a whole lot. So let's talk about the money, okay? Because money, 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 that's why you're here, right? The entry order. What would you do, guys? And again, I want to remind you, remember we talked about this. So I'm going to show you the chart must be okay. And then on your small chart, so this is your 5-1 chart. At the time of the first bar down, you guys see where the bars were going up and then the bars going down. See that? This little red bar right here. That's the time where you lock in where you're going to buy. So you're going to lock it in by saying, where are my triggers and where are my fibs? You could put a mid-band or a 1-to-1 there too, but mid-bands, 1-to-1s are the yellow dots. Does everybody understand this? This is your window for going long. So when you're looking at your chart, and again, let's look at, kind of how it played out. I'm going to try to get back to it. So this is your first bar down, yes? So at the time you make this first bar down, you're going to go down here and you're going to place a limit order to buy at the spot. So you'd right click on your chart and you would literally place a limit order at, like, I would say 33.70.50. So you're right above the area. So you get a fill. Does everybody understand where to put the order at the blue fibs and the triggers? Got that? And again, how much money do you guys need to make in a day to make this worthwhile? Our goal for you is $400 a day on one contract. That means 4 points on the S&P is $200. So again, I just want you to think about trade selection, trade entry areas, and then management. So if you get long at 70.50, at 74.50, you're up $200. Does everybody understand that? That's how futures work. So you buy here. If you get out at 74.50 or 75, you make at least $200. You want at least $200 in your trade. All right. So we'll go through and we'll go forward. So again, left chart, right chart. The left chart is red and running into trouble. Can we agree to that? So your trade is going to be one and done unless you break through your fibs. And usually you'll get divergence. Now, we're going to talk about this. When you have weaker triggers on your big chart, smalls below your large, and you get divergence, what normally happens? A reversal of trend. So you're not going to buy anymore over here. It's one and done. This is a really, really big thing, guys. I want you to really see this. No divergence before your trade, you get a winner. Divergence before your trade, you're probably going to lose. And this is where a lot of new people go, oh, I'm going to buy right there anyway. Again, it's not that it won't go up. It's just not the highest probability trade. You would get in, then you'd get stopped out, and then it would go back up. So, again, before the trade, no divergence. That's going to be our magic secret, okay? Price hit the red fibs. What does that mean? No more long trades, right? Until they break. All right. So as we roll forward, did they break? So your large chart triggers and strength are what? Very strong up, right? So if we can get a pullback with no divergence, guess what happens? We end up with another trade. Let me get this to the right size. All right, let's roll forward. Yeah, I didn't get it. All right. Now, the small chart didn't pull back right away, but the large chart did. Now, this is not technically one of our trend trades, but it is. Somebody asked me today, Bruce, I believe, if I'm not mistaken, when would you use the market flow, which is our volume analysis, which we're not going to do this yet. But this is the edge of support. When the large triggers are up, you're going to get another trade like that. It doesn't have fibs and triggers here on the small chart, but it has them on the large chart. Can you guys make a case for triggers going up and buying Fibonacci support on the big chart? It doesn't have to be just on the 5-1 chart, guys. You can do it on the big chart too if you get the right look. Just going to throw that out there. You're going to find that this one will be your most profitable trade because you're going to be buying at the edge of support and you're going to be getting out at resistance again. Now, another key factor, was there any divergence before it happened? No. All right, let's roll forward a little bit. Divergence before from a fib. What's going to happen? We're not going long anymore, right? No more long trades with divergence. Two divergences from fibs. What does that mean? You guys know what it means, right? It means we're going down, right? All right. Should you be selling fibs with a pivot stop out? That's the question. Remember that trade in the plan? Let's see if I can trick you. This trade. In reverse, but this trade. pivot stop out at the fibs with a prior divergence. Do we want to do that trade? You see the trade, right? We'll see what happens. If you did it from resistance with the triggers down to support, you made another 5 points. So you made 4 points, 5 points, 5 points. Anyway, just food for thought. I mean, again, we're going to do like 100 of these, so we'll go forward. Can you guys see that? I tried to blow it up as big as I could there. All right, let's go forward. I may have to squeeze that up just a little bit. All right, jumped a little quick forward, but nothing to do, nothing to do, nothing to do, nothing to do. On board, on board, on board. It breaks out. Do we buy fibs with everything going up? Yes, we do. Isn't that our trade? That is our trade. And where is it going? You can't see it, but always the next objective is what? The next Fibonacci resistance. Here, let's see if I can blow that up. Sorry, I'm getting used to moving this around. It didn't make it. That's okay. So if you're getting in here, let's talk about management, because that's always a good thing, right? If you get in here, you're expecting to get to the red fibs. If the market comes back down and puts in another up bar, this is where we trail our stop behind new pivots. But you guys will see that a lot in the videos, right? Trail it behind the pivot, trail it behind a new pivot, then they're going to stop you out, but you didn't lose any money. That's an okay thing. Now, the market's going down and all of the triggers are going down. What does that mean for us? Are we going to sell fibs and triggers when they come together? So I want you to look at it before you get into the position. Is there a negative divergence number on the low? No divergence. No, there's not. Hold on. Here's the low. Do you have a negative divergence number? No. So this is where you're going to be entering your position. Mid bands, fibs, 1-to-1s, this is your window. Do you remember the rules? Let's go back and look at the rules here so you just look how easy it is. When it's going down and the market starts to go back up, your eyes are focused on fibs and triggers, resistance and triggers coming together with the triggers. Everybody okay with that? So again, when you're looking at it in the real world, you're going to see something that looks like this. And you're going to have to say to yourself, again, your entry is going to be, 81 to 82 window. And your stop is going to be up here above, right? So let's talk about stops. Generally, a 3-point stop is more than enough. So if you're entering, let's just say 81, let's just call it 81, okay? Your stop's going to be 84. So you're going to put your stop above all of your triggers and all of your areas, so they have to really work to get your money. And you could lose. I mean, you're going to take losing trades sometimes, and it's going to be okay. All right, let's go forward. Here, I'll give you the quick squeeze. So again, you're going to always go back in history and you're going to see this and you're going to be like, wow, that was a really strong trigger. I should have gone short, right? Everybody can see this in history. Aren't you guys really good at seeing, oh, that would have been a great spot at 81? Now you've got a rationale or a reason why you're going to be selling 81. Remember the very first picture I showed you earlier this morning? I'm going to bring it back up again just for fun. It's on the spreadsheet. And again, I prepped you guys for this, but now this is the example of it. When are you going to ignore a little divergence and hang on for dear life? That's called management. When the triggers look like this on the bigger charts and the small triggers are strong, you're not going to worry about divergence. Is everybody okay with that? I mean, it's super easy. Everything is so strong. You're either going to win or lose. Really easy. Super duplicatable, no complicated hour-long management video. If it's really strong, you're going to not worry about divergence and you're going to get paid. So, again, you're going to have to be able to articulate this to yourself when you're looking at your trades, but how strong are your triggers here? So just look at the triggers only. Don't look at all the other lines. Super strong, right? So even though you get this teeny tiny little divergence, you have to, and this is, again, I want to go through this because this is the difference between trade number one, where all the charts are super strong. You're not going to worry as much about divergence. You're only going to worry about divergence in trade number two. And you'll see this in the video. If trade number two, it's a momentum type trade or something. If you don't have all the charts with momentum, you're going to respect the divergence. So what was the result of going short at 81? Well, pretty easy made it down to the blue fibs, didn't we? I mean, really easy made it to the blue fibs. So, this would have been your exit as you were getting down into here. This is yet again another, I mean, we've already made a bunch of money, haven't we? I mean, we've already had a few winning trades and, again, just this one trade right here, call it 6 points, that's $300. $300 in that one move, just to the fibs. To reiterate, during a day, we want you to be able to make 400. So, I mean, that's 75% of the daily goal in one move. Let's go forward, shall we? Now, triggers are strong. You're going to sell again at the same place you got out, right? I mean, if the triggers are strong and you broke the fibs, you're going to sell again when there's no divergence, right? So you got out at 75, but you got to go short at 75 again. So it's the same trade, you're just getting back in again. The only time you're going to get out is if there's divergence. So there's divergence on the bottom. I'll fast forward a little bit. See it? So if you sold, you're going to get out after the third bar up, which is divergence. So you're not going to lose any money. You have all the potential in the world and virtually no risk. And we're not going to do trend trades after divergence, right? So you guys remember this look? We teach it a lot. The fib is still blue on the big chart. That's our, again, just to reiterate for the video. You guys see this a lot, don't you? And I think a lot of people get a, sticky spot with this look. We call it our 50-50 look. where everything is going down, but the fib still stays blue. And you can take a trade, but you have to respect the divergence a lot more when the fibs don't change colors. So let's look at it. Yes, we'll go short, but we'll respect the divergence when the fibs don't change to red. Pretty easy, right? Let's go forward and see what happens. Very typical. You know, and I think in my video, trend trade video, we call it a potential break, and then it unbreaks. You know, it's kind of like a fake breakout. I use that term sometimes when we're teaching the class. It's like, we're going down, and then, no, we're not. And usually that fake breakout usually goes back up the other way. So anyway, let's watch and let's see what happens here. Are you guys okay with this? Can you see everything okay? I'm trying to make it as big as I possibly can so you can see it. All right, let's roll forward. We got to resistance. There's not really a trade here, is there? This is the frustration part for some people. And this is where every one of our new people just jump in going long anyway. And it's not the right rules to just jump in, which I can't stop people from doing that for some crazy reason. But anyway, that's not our trade. Our trade is where the fibs and the triggers come together. People hate not catching every move, right, Bruce? They hate sitting tight, waiting for the right trade. But look, you guys are already up $300 or more for the day. So just chill and let's see how much money you end up. All right. What happened up here, guys? Call it out to me. Fibs with divergence. That's the killer of the trend, just like that. Now, it doesn't mean that the fib won't ever break, but it usually means it's not going up from there anymore. See it? Pretty easy, right? No matter what you think, no matter what you wish might happen, you're not going to have a 5-1 trend trade because the fibs and triggers don't agree. Period. They don't agree. So here's the question, and again, you're going to see this a lot. We're going to have resistance that might hold. And again, the termination condition. You see it? Fibs, pivot, stop out, divergence from a fib, no more long trades. We'll get another trade eventually, I promise. Notice that they hit the edge of support with the large triggers going up. Now, this isn't a trade we're teaching today, but this is where our market flow traders will trade from the edge in an uptrend. You see that exact spot? 33.81. It's not a trend trade, but this is where the market flow, if you got a long signal, would give you a long signal. Anyway, we're going to do trend trades, so I won't digress too much. All right, that's quick. Once again, we reach fibs. I mean, this is the mother lode of all termination conditions. Pivot stop out of a pivot stop out at fibs with really weak small triggers. That's the mother lode of all termination looks right there. And usually the trend reverses, and usually my market flow traders are pretty quick to short signals right there. Now, since we're not doing market flow signals, we just won't do long trades. How's that? Easy enough? No long trades? And that was quick. Hang on. I guess there was some news out during that time. When you record at 50 times speed, sometimes they jump really quick. All right. Bruce, this is the one that frustrates people because they go, there was a big move. I should have had some of it. Right? There's a big move. I should have had some of it. That's like walking in the bank and saying, man, that man has a lot of money. I should have some of it. No, that makes you a bank robber. If it's not yours and it doesn't fit your rules, you just have to wait. It's okay. You will get the rules with the fibs and triggers to come together. And think about it. You're already up a few hundred on this morning. So we're going to, you know, well, and again, we're not talking about edge trades, but you can kind of see the look where you could make a case with the large chart to trade the edges to go short, which it doesn't fall in line with the trend trade, but it's strong triggers and a fib on the big chart. I'm okay with that, but it's really hard to teach because look, this is the moment in time you're going short. You need to find a reason over here to go short, and there's no way to consistently teach a new person on this one. So I want to give you a trade that will make you money or give you at least super high probabilities of making money every day, very, very, very consistently. It's okay. Everybody's brain gets in the way of day trading. That's why so many people fail at it. The only thing that works is consistently following rules. That's scientific fact. All right. Blue fibs, weak triggers with divergence. What does that mean? It means don't go short on your small chart. And, if you did go short with a momentum trade, let's just say hypothetically you had a limit order and you're like, yay, I'm going short, which I could get on board with. This is the one where you have to get out immediately after the divergence so you don't lose a bunch of money. And you can't go, I hope it works, because I want you to see, again, I'm going to show you from the spreadsheet one more time. I like to reinforce the lessons if it's okay. And once you have all these lessons in your brain, we'll start picking up speed. We'll just look at trades. See the triggers? Very weak over here. Divergence ends the trade. So if you're doing the strong trend momentum trades, it's all fine and dandy until you make divergence. So if you went long, you have to get out after divergence, and you're going to lose a point. You're going to lose 50 bucks. Unless you do something crazy and hang on indefinitely, and then you're going to lose a lot more. So when do you manage out with divergence? When the triggers are really weak. Got it? This is a weak trigger. They're inside of each other. And the fib didn't turn red. So this divergence over here tells you better get out after the third bar up or you're going to lose. So immediately when you're in, you're like, oh man, I'm wrong. And look, if you get in at 68 and you recognize that you have the divergence potential before you take your trade, that's why this little number plots live. So you know if there's going to be divergence potential. Maybe you put your order in, but you only have a 1 or 2 point stop instead of a 3 point stop. Food for thought. All right. You guys are getting pretty good now at the rules, right? Strong fibs and triggers, when to stop, when to pay attention to divergence, because I want to pick up a little speed. All right, let's roll forward until we get to trades. This is, again, look, we made a bottom. We have a lot of strength going up. This would have been a trade right there. But it didn't quite make it to the spot, which is very frustrating. Isn't that very frustrating for you guys? Because you're like, hey, I want to buy the blue fib and the triggers, but I didn't get a fill. This is where the market flow maybe helps out a lot of those people. Because if you get a signal to go long with the market flow, you can still take advantage. Now, momentum going up. You guys will remember this trade from the video, won't you? If it's really strong momentum going up and the fib changes to blue, especially if the yellow dots help you, you're going to go long right here. See it? Blue fib, triggers going up, 100% well-defined, nice and easy. Bruce, this is the one you've been missing right here too, I think. It's a momentum trade. But the nice thing about momentum is if you lose it, you get out. Yeah, so again, it has to be quantifiable and repeatable. Super strong triggers, breaking through, super strong triggers, break fibs. If you get a chance, try to take advantage. You see it? Anybody have questions about that one? Strong triggers, break fibs. Well, if you have a blue fib and a green trigger, it's justifiable. No fib, no trigger, no justification. Is that fair? Easy enough? That's why I added this trade into the plan, because you guys love that trade, number one. And again, maybe you want to rewatch this video for the second trade, and I have the video on this. The only time you really get away with these are at the top or bottom and when it's really strong breaking through things. All the other times you get these trades. All right, let's roll forward. Hopefully I'm not making anybody motion sickness. Look at your chart on the left. Look at your chart on the right. If you're already long, you're loving it. If you're not long, you're hoping it comes back, right? Because if there's no divergence and it pulls back, you're going to do another trade. Now, if you waited for that, you didn't get paid, did you? So that was your only attempt right there. And if you missed it, you're kicking yourself. So again, you got to be quick on these sometimes. Be ready. What do you see over here on the left? A lot of red fibs, right? And the triggers they're still strong, but they're starting to come together. Usually you have to start wondering if it's going to be the end of the trend. So let's watch our small chart. And again, let's just say hypothetically you're going long. So you're long at 81.50 because you're going to do the momentum trade, but you probably don't have to risk too much because there might be divergence working. We'll see how it plays out. You ready? Uh-oh, divergence. Look at your chart on the left. Fibs, red fibs, weak triggers, and divergence. Do you ignore it? Do you not ignore it? All right. So if you were long, no harm done, right? Or you were still long. What happened? How'd you get out? Would you be mad? Would you not be mad? It's okay. Was it strong enough? Was it weak enough? Again, look, there's going to be a difference, which you guys will get here in a little bit. If one of them is still outside, do you get out or do you stay in? If both of them are outside, do you get out or do you stay in? If both of them are inside, then it really makes a difference. So you guys say stay in, some say get out. All right. I want you to think about it when you're looking at your chart. And again, you have to kind of, again, I hate to say situational awareness, but look at how strong this move was up to the upside. if you were able to take advantage of some of it in the middle, right? So let's say you only got 75 up to 81. You're already well over your daily goal of $400, right? So if you get in and get back out again and miss it, it's okay. There's going to be more. Let's find them. Okay. When it's one outside and you've got 35 bars in a row, maybe you make them come take your point from you. Yeah, food for thought. All right. Now, this is literally way, way, way different. Look at this one. This is horrifically different, super different. Do you see how you have exact fibs with super weak inside triggers here? That's 100% going to be a top. You see it? And again, you guys are going to remember this picture. This is not the exact same picture, but when you're in the plan, I got to quit closing that thing down. Termination condition number 1 and number 2. Look at the picture. I mean, this isn't the same market or the same day, but this is from June, but we're in August, almost September now. Isn't this the exact same look? Super weak triggers inside with divergence exactly from a fib. I want you to see what normally happens. You normally get a pivot stop out, then it goes down. Usually it'll stop out the last divergence high and then it goes down. Usually. Doesn't have to, but usually it does. So I wanted you to see it before it happens. You see it? So I think the more you see it, it's about chart reading and getting comfortable with the patterns once you get comfortable. So let's scroll forward and see what happens. That's a pivot stop out. Well, I had turned them off, Jay, on that example, just so I could highlight the pictures so people don't ask. Again, sometimes I turn them on, sometimes I turn them off. It just depends, again, there's a lot of different lessons that I teach. And, sometimes I turn the fibs off so that it's not confusing for new people. So you can focus on the triggers first, and then the fibs make sense, hopefully. Got it? So I turned all the fibs off on this chart just to highlight the overweak triggers. It's a very similar thing to over here at the left. Look, one trigger got inside and the darn thing kept going. Not until 2 triggers were deep inside did the trend stop. Anyway, all right. Can you see up at the top? We had our pivot stop out over here. And look how obvious. This is where some of my more assertive market flow traders are looking for short trades, Bruce, with that look. Anyway, let's see what happens. Let's go forward. And sometimes they lose. All right. And again, the assertiveness, see where it's all green still? Now notice over here on the right, we went a little higher and it's all good. So again, 1, 2, 3, 4 divergences now. Then you're already down good. Notice once the triggers and the fibs actually agreed with each other right here, you see it? So we have a termination condition, pivot stop out. Fibs and triggers actually agree only at one place on this whole chart. Where do you have a red fib with a red trigger after a termination condition? And again, like I tell Mike H, he's my main culprit. He'll go short and he'll do it a couple times. Going short against green triggers is the death sentence for most people. If you can hold your water, have you ever gone short like 3 times in a row and lost, only to watch it go later after you've already lost all your money? and you stop taking shorts, this is where rules will actually keep you from going crazy, because you can see a potential top, but it's not an actual top until the market says so. And again, I would like to think that our fibs and triggers being in the same direction at the same spot help you a lot. So we're anticipating a top, but it's not actually a top until it gets to here. Anyway, food for thought. Now pivot stop outs really will probably be better, but let's see what happens. And we're going to have much of it. Again, going short against the trend is always a tougher one, but again, you had an opportunity, I think, again, if you went short at fibs and triggers, you see it? Where did it go to? It went to the fibs. So, I mean, not to minimize this, but 88 down to 83.50, that's another, what, 5 points plus? And again, one of our termination conditions is if you hit a fib and the triggers are still going up, you're not going short anymore, right? So now we have to wait. Waiting is the hardest part, guys. Till everything is right and everything is really right at the right spot. Let's go forward. All right. Starting to break through ish. Divergence on the high. Yeah. So divergence on the high, you have to check the conditions of your triggers over here. Are your small triggers above or below your large triggers? Below. No, your small triggers are below your large triggers, so it's weak. So if you get divergence, that's okay. So if you get divergence, you're not going long right here, right? Because it's really tempting to say, hey, I'm going to buy the fibs and the triggers. And if you did it, it didn't hurt you. But that's the one that usually doesn't follow through right away. Usually it'll go down a little further and you'll get to the edge. We'll see. And we got to the edge and kept on going. All right, let's watch and see what happens. All the triggers are rolling down now, finally. What does that mean for us, guys? Just looking ahead, where's the only place where the fibs and triggers are red and together? Give me a price. Fibs and triggers together and a red fib. Nope, not 87. There's no triggers here, Abdul. There's no triggers at 87. The triggers are up here, basically 33.90. See that? This is where people make mistakes. I'm glad you said that, Abdul, because it's not here, because you're going to get in here and then you'll lose all your money when it comes up here. And then you're going to watch everybody else win, maybe. And then you're going to be like, why did I lose? Red fibs and triggers together. Yes? 90? Let's see. Well, it didn't matter. We didn't get it anyway. Now, once we have divergence on the low, what does that mean? We're not going to do a trend trade short. That's going to be our rule for the day, okay? Divergence on the low, no trend trade short, so we're waiting. If you did go short, you got slaughtered, didn't you? You'll find that almost every time it goes down, you won't have divergence beforehand. Watch. So there's no divergence on the high. Can you buy the fibs and the triggers going up? Strong triggers are pretty good. Fibs and triggers come together. Can we go long? No divergence, strong triggers. We're going to try a long trade, right? Now, stop placement. Where could the market go to? It could go down to 89 and 88, right? So you don't want to put your stop at 88 or you're going to risk getting stopped out on the low. So, again, you're going to have to think about it. I mean, realistically, if you get in even at 90, which anywhere between 89 is probably the right number, give or take, your stop needs to be down here somewhere. So it's out of the way. You got that? It has to be down here. And if you're not willing, if you can't risk an extra point or you're not getting the right entry area, you can't do the trade. 3 points usually, look, even if you got in at 90, 87 would be your stop. It has to make visual sense. Everybody okay with that? No divergence, triggers are up. We're going to try to find a long trade and then see if we can get paid. You got in. What terminated your trade? The same thing that terminates all the darn trades when you hate it, but you can't fight it. 2 divergences, trade's over, right? It's just over. And if you were in and you had your stop in the right spot, you didn't actually lose any money. You didn't win any money probably, but you didn't lose any money, and that's half the battle. Fibs and triggers together, or pivot stop out, it's a right trade. Pivot stop out the other way, no more long trade. And again, you could see that we were kind of, we don't have the best strong triggers over here, do we? So they made it back down to the low. And again, I don't see much in here. Do you? I see blue fibs with down triggers. I see blue fibs with divergence. So I don't see anything that says go short yet. If this breaks like 87.75, you see how specific that is? If this 87.75 turns red, then we'll go short. Otherwise, we have triggers going up, some triggers going down. We end up having to wait a minute. It's okay. Let's wait. And see how we're starting to roll down here? Breaking below, no divergence on the low. Not the perfect spot. It's just not totally tight and perfect, but all right. Now everything's together. Again, if you went short, it's not great, but if you went short, you got stopped out. I think that's right after 9:30. All right. Now, easy one. Triggers up, green midband, triggers up, triggers up. No divergence. That should go up, right? Finally, everything's in the same direction. Small triggers are above our large triggers. Everything's up over here. We should see something to the upside now, right? Did we? I think we did. All right, cool. So could you have made some more money? Sure. Now we have divergence. We have to ask ourselves, get out or hang in for a little more? What do you think? Hang in there for one more pivot? All right. Let's see what happens. Yeah. It's strong triggers up. What's the other thing that could maybe cause trouble? A little divergence line. So again, we'll just watch this. If you were long from here, and you were up, just say you had a 2 lot. Maybe you take 4 points on your first one, and then you get your stop back to break even, right? They would get you, and then you get a second divergence, and then that would end it. Anyway, that was a good trade, though, right? I think everybody can see that one pretty easy. No divergence, trend trade long. Didn't follow through all the way, but we haven't had a lot of follow through on this. I don't even know what's going to happen on this thing. I didn't even watch it. I just recorded it yesterday, so I'm kind of learning as I go with you guys. Not learning, but I don't have the benefit of knowing what's going to happen. We're just following rules. Strong down, strong down. This is the one that makes everybody cry and frustrated. They say, how could I have gotten that? And what you're really asking is, how could I break all the rules and get away with it? I haven't found anybody who's been good at breaking all the rules and getting away with it. Usually they lose all their money. Divergence ahead of time. This one really makes everybody more angry than they ought to be, too. They feel like they should have been paid something for all the move that happened. And they're so ready to sell that even though you have divergence close to a fib, they'll sell anyway and lose. You see that? This is a very common one. They'll go, oh, I should have been paid. So even though there's divergence close to a fib, I'll go short anyway. I'll teach them. Anyway, they get into a mess and then they get in trouble. Here, let's roll forward out of the mess. All right. Divergence is a dangerous thing, isn't it? You guys are learning a lot of lessons about divergence before your trade instead of no divergence. Which I say this buried somewhere in the 2 hours worth of trend trade video, but to reiterate it. So big move, you didn't get any money. Too bad. Now, everything's going up again. Yes? Yes, yes, yes. So can we do a trend trade from the mid band and the 1-to-1s? Everything is up. Everything is up. We haven't gotten to the fibs. Can we buy a pullback to 83.50 or 83, whatever? Yes, yes. All right, everybody good with that? All right. You got to pull back. Maybe you even didn't even get a fill. But if you did get a fill, look at what killed it. You see our good friend divergence, right? Again, detrimental to trend trades in the future. A lot of people go, well, I'll buy it anyway, even though I was really close to a fib with divergence, and then they end up losing right here. This is where people lose more money than they need to. One tick from a fib. I mean, I know you guys love to hit them exactly, but one tick away with divergence, you can buy there, but it's just going to be a disaster. All right, let's go forward. I got more goodies for you guys. Is this more educational than watching the market move along slowly? Once we're done with this, we'll go back and we'll look at today's market and we'll see if we can see where all the trades are. I bet you guys pick them out 100%. All right. That went too fast. All right. The market was going down. Sorry, I missed it. It jumped on me. This one should be really obvious. Can you see the fibs and the triggers all together with no divergence ahead of it? Pretty easy on that one, right? I mean, that's about as easy as they get as far as what we do. Break a fib, no divergence, sell the fibs with the triggers, get out at least here, if not more. What do you think? Easy 5-pointer right there. It's $250, by the way. Your goal is only, think about all the trades you've done that have worked out or, not lost money. And then the ones that follow through, you get a lot of money. Anyway, Let's keep going. And again, it stinks that you have to wait a couple hours to make money, but because this is the one thing that doing replay and study does not prepare you for. The 3-hour wait in between the trades you have to take. But I want you to think about it from this perspective, okay, guys? If let's say you spend 6 hours watching the market and you get 4 trades, and you're able to consistently make $400 per contract or better. Think about what I'm telling you. 6 hours to make 400 bucks. Well, that's not a bad per hour paycheck, but think about it more in terms when you get to 4 contracts or you're getting to 10 contracts. You start making $4,000 every 6 hours, then it really becomes significant, doesn't it? If you don't get this process down right on simulator and then right on the micro contracts and then get it right with real money for a few months on one contract, you'll never make big money, ever, 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 ever. So that's why, I'm relentlessly beating these rules in. And again, it's not that the market doesn't keep going sometimes after divergence, because it does. But so far, you guys have barely even done a loser. I don't even know, maybe one loser this whole time, a couple days worth. Let's keep going. Divergence on the big chart, divergence on the small chart. And again, this is that same bottom look that we had before. Let's see if I can back it up. So watch. Let me see if I can get it to go forward just a little bit. That's pretty quick. I think. Anyway. It was weak triggers with divergence, and it's the same old thing every single time. All right. Did I go back too far? Yeah, I did. All right. There it is. See the triggers? How they're inside of each other again, and the fib didn't change red. If you didn't get anything on the short side, this is the one where you're going to try to jump it, which is okay. But because of the large chart, you have to get out after the third bar up. It's happening right now. I believe it happens all day, every day on every market. You see it? Weak triggers with divergence. Don't go short. Now, as this rolls forward, again, I have to, we'll just talk about it. Termination condition, maybe a long, then you get divergence. The only trade that's the exception to no divergence is what? A pivot stop out. That's why I put that one trade in there, because if it's really, really good on the big chart, fibs and triggers, that's your pivot stop out trade. But you remember that trade though, right? From the plan, it's also your termination condition. Pivot stop out at the bottom. If you get a pivot stop out with the trend after the bottom holds, you get that trade. All right, we're going to go forward and keep doing this. Divergence, pivot stop out at the top. No long trades, right? So we're waiting. I think this is the overnight market. All right. Again, I want you to see what happened. Look at the large chart. The triggers are down strong, right? And you get divergence. So here comes the big question. Do you sell 64.50 anyway? Do you take an exception and you say, because of the large chart, and your area over here, do you sell it anyway? You did it and lost? Sometimes they lose, sometimes they don't, Jose. This one didn't lose, did it? Again, with this look on the big chart, you have to sell that one. I mean, you don't have to, but now what's going to kill it? Oops, I jumped a little bit, jumped the gun. What would kill it? Yeah, I mean, if you get here and you get divergence, then you're going to get out, right? So you're on the wrong side of your trigger. So if you do get divergence, you can get out. Or do you stay in if the triggers look like this? We had this conversation earlier this morning, didn't we? See the trigger line look on the big chart? If they're weak, you really, 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 really pay attention to it. If they're really, 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 really strong, and again, you have to be able to say, oh, I can ignore the divergence because it's so strong, it's probably going to go all the way to the next fib. You see that? Again, this is a crude oil picture, but it's the same thing here. If it's so strong, but it has to be quantifiable and repeatable. I think you can say without question that that's as strong as they get, right? So when you sell 64.50, that's going to make a lot of sense on that chart. And the idea is that you're going to get paid, and here's where the new people get out and they're like, God dang it. They go, oh, divergence, and they get out right there, and then they're like, oh, I shouldn't have gotten out. You see it though? The large chart tells you it's okay. The small chart scares the crap out of you, and you get out and you miss all the money. So you're going to have to get this balance between the large chart and the small chart, obviously. And if they're weak, you get out. If they're really strong, you stay in. Anyway, food for thought. All right, we're rolling forward. Look at where we end up. From 64.50, we ended up down at 46. What do you think about that? Anyway, you were probably sleeping when it happened. It was an overnight trade, but when it happens during the day, you'll be ready for this one now, right? Again, some people ask me, it's like, do they trade in the evening? It's like, yeah, they do. The trades are all the same, guys. The only variable is how long do you have to wait for one. All right, let's go forward. Divergence from the fibs on the bottom. I mean, we got to a wall of fibs, right? Lots of blue, lots of blue, lots of blue. Can you take a long trade at blue fibs and triggers coming off of the bottom? You see how clear it is right there that you'd be long at 33.49? Fibs and triggers together. Now, how long are you going to stay in the position? Hopefully they don't force you out of it, right? So if you're in at 33.49, you're already up 6 points. Yeah, usually around the mid band is the first target area. Uh-oh. I think that was the end of that day, that my recording. You guys want to do some more? All right. I did something else. This was the one that we started yesterday, which, again, I incorporated the market flow now with this chart. So it takes it up another level as far as what we're doing. And then I did some more recording too. Let me get past this one. I just want to show you because, again, a lot of people say, well, do I have to trade the S&P, or do I have to trade this, or do I have to trade that? So what I did was I put together the YM, which is the Dow Jones Futures. Everybody see that? Now, because the market is more volatile, meaning a lot more range, I used a 21-3 chart and an 8-2 chart as my small chart. But again, I always say you can trade any market, but you use the same rules. So we're going to use the same rules on the YM 82213 that we used on the S&P 14251. Everybody okay with that? Just to show you a different market and get you, some additional information. All right. So let's look at our charts. Did we have fibs and triggers come together on our small chart for going long? No, we didn't. Now the large chart says we're going up. The small chart says we're going down. What do? Who's going to win? This is the number one killer of most new people. You wait. Because if you guess long because of the big chart and the small chart wins, you're going to be mad. And if you guess short because of the small chart and the big chart wins, you're going to be even more mad. So the idea is to wait until they both line up. Again, the large chart won out on this one, didn't it? Yeah, so 50-50 on large chart, but the large chart said up. So you're not going short, right? Now, there's a case for market flow edge trading to go long, but that's not our trend trade, so we're not going to talk about it. You can make a case for that, though, right? Going long at support with the triggers up. So, again, you'd have to do it. Look, this is the place where you'd have to go long. Let me just show you on the little chart. See how scary that is for new people? That's why I don't teach it. Because they're like, oh, how do I go long there, John? And it's like, you don't. Once you've had software for, a year or two and you know that it's going to go up there, then you can treat it differently. Or if you have market flow long signals over here, you can go long. But anyway, that's a different lesson than the trend trades. Now we hit fibs at the top. What happened at fibs? I mean, that's our old friend, isn't it? Divergence at fibs. We're going the other way pretty much every time. So we're not going long anymore. That's the first thing. So look at where we're at right here. The large chart's now going down and the small chart's going down, and we have fibs and triggers together. And there's no divergence on the low. Is that our short trade? 100%, right? Without question. Now, I don't normally trade the Dow, so, what would be a normal stop? 15 ticks? 27,870 maybe up here? It seems to me you'd have to have at least a stop up here to be out of the way. Now, when are we going to trail our stop? If we get a down bar, you can reduce your risk, right? So let's see what happens. All right, so we got a down bar. And then what happened? The dreaded divergence, right? Now, divergence doesn't always kill the trend. Sometimes it makes it stop out the high. And then we go down anyway if the large chart says it will. Remember that trade from the plan? This is the opposite version of it. Hang on. Where'd I put that? the pivot stop out trade only with the trend. Let me see if I got a short one in here. So you're in your perfect trade thinking you're about to get rich, and then you get divergence. Can you trade a pivot stop out with the trend? Eh. Your large chart has to agree with this, or else you don't get away with it. So just because you get divergence, it's not a death sentence, but you can still trade the stop out if it really is easy. So, again, this is that spot, but it's not quite as easy as it should be, is it? I mean, it's like, it's not bad, but it's not great. Do you see why? Price bars are above your green triggers going up. It's definitely not a long trade because of our large chart. But it's not the easiest short trade, is it? It's not easy. So this says down, this says up. What are we going to do? The thing that we always do, which is wait for both of them to agree. You guys understand that? Just wait for this to agree with this, and then you'll get your easy trade. Uh-oh. I didn't mean to do that. There we go. I lost my spot. Shoot. Hang on. Oh, dang it. That's the YM. Let me get back to where we were. Shoot. I lost my spot. Dang it. All right, there's my spot. All right, there we go. Sorry about that. Okay. We're at 4:21 time-wise. Anyway, hopefully you guys can see this, right? Price bars above green triggers and blue fibs. It looks like a short over here and a long over here. So the idea is we're going to wait until they line up. So let me try to get it to go forward. The pivot stop out did work, by the way, for what it was worth. And then all the triggers are down and we have fibs, but we don't have triggers on our small chart helping us. No, you don't wait for a long. Look at your large chart, Brian. Down, down, down. Shorts are nothing. All of your triggers are going up. Longs are nothing. All of your triggers are going down. Shorts are nothing. So again, this is, we call it an edge trade, but it's really a trend trade on the big chart. So everything is going down. There's no divergence. No, it couldn't flip. Is this not our trade rules? Down triggers with a red fib. It doesn't always have to be on the little chart. If you get a perfect trade on the big chart, why not take it? Think about it. Up triggers with a blue fib. What happened? Down triggers with a red fib. What do you think is going to happen? I mean, you'll get used to it. So let's see where it goes. It went down, and then stupid divergence killed it. It's not a flip. You're trading what's happening right now. So it went down, but then divergence killed it. This is the secret right here. No divergence before it. Divergence after it causes trouble. All right, let's roll forward. Divergence on the low. Triggers rolling up. Bruce, this is the one right here. If you can get your hands on it. Yeah, but you don't do anything with it until everything lines up. When everything is lined up and you have blue fibs and green triggers, life is easy. Isn't it? Life is a lot easier when everything is going your way. And then now, look, we're going to make it up to red fib, so we're going to have to watch that area and see what happens. What's happening? Trigger. What is going to get us out of a momentum style trade if we get it? Divergence, right? Which I don't know if we can have it or not, but we'll find out. Watch. Didn't get anything. All right. That would be one of those little momentum losers where you get the up bar and then you put your stop below it and you just lose a little bit. Sorry, it happens every once in a while. They have to win every once in a while or else we get in trouble. All right, let's roll forward. Blue fibs, but now we have strong triggers, strong push, right? See if they can continue. What do you think? Down on the large chart, fibs, mid bands, and triggers, no divergence ahead of it. Is that our short again? All right. They're being a little stubborn. So that was your short. And then two divergences puts it into it temporarily, doesn't it? Didn't get any traction with that one. It's okay. So again, I think the charts are totally opposed to each other. This is down and nothing but down, right? So down was the right idea. Two divergences made it go up higher. Down is still the right idea if it happens. Or if it doesn't. Either way. Now you know what to do, right? Divergence on the low, divergence on the low, everything starts to roll up. Yeah, well, you go short and then two divergences beat you out of it. There's not much you can do about it. It happens. And then everything was leaning up on this side. So, again, just kind of depends on how things roll out. Would you guys agree with momentum long here? One more time. The last one lost a little bit. So, all right. Let's see what happens. All right. I jumped a little bit, but look, there's your momentum long. We made it up to the fibs. So we snuck a little piece out. Look at your large chart. Lots of fibs. That's the end of the long trade, right? I mean, it's just a little quick hit right there. But and remember, I recorded this at 50 times speed. So when I move it, sometimes it jumps a lot. So look, I'll just push play. Double divergence or fibs with divergence with more divergence. Guess what's going to happen? I'll just push play. We're going down, right? When you guys are doing replay, you're going to do the same thing. Would you sell a pullback here? Everything's going down. All the triggers are together. If there's no divergence ahead of it, you will, right? Well, didn't really pull back. Now you hit support. So we're trying to get through support. What happened at the bottom? divergence from support. So we have to have that break in order to go short again, right? Or think about any short trades. See the momentum right there? Divergence on the high helping, and then right there's your one attempt. I know there's not a lot. I mean, there's a lot of movement, but there's not a lot of trades. This is the only one that's definable by fibs and triggers with the large chart helping. Can we agree? Again, we'll see how it plays out. Darn divergence. Didn't lose any money though, did you? Again, you're going to get this a lot sometimes where you're like, gosh darn it. I thought I was going to be rich and then not quite rich. Let me ask you a question. If you get out with divergence and you don't lose any money, should you or would you be thinking about selling over here or not? You would go long against this look right here, Chris? So again, if the trend is down, what type of trade do we have? Pivot stop out trade, maybe? We'll just watch it. Here, I'll push play. All right. Can you justify a short with 3 red Fibonacci's inside of the triggers on your big chart? Isn't that the rule? I mean, how strong are the triggers? And then you got fibs and triggers together. I mean, it's kind of hard to deny that one, isn't it? But do you see how you have to kind of shift? Small chart says okay, small chart has divergence. Large chart says it's okay, large chart says we're going to make it. Again, I don't think that was a very difficult one. All right, let's go forward. A little bit of meat on that bone. Fib support. Watching for divergence. There's divergence. That should be the bottom, right? That's the divergence at the bottom. Uh-oh, we broke. There's no long trade in there, but divergence on the low. So what are we going to do? We're not going short again, are we? Or are we? Yeah, there's a lot of points in there sometimes. See how you're above all of your triggers and you have divergence. So we're not going short because we don't have any triggers helping us really. And you can, but those are the ones that have a tendency to lose a little more. Do you see why I say it? Tell me about the condition of your triggers. Weak and divergence, lower probability short. And again, everybody gets so hyped up on going short because it's gone down so far. And I'm not saying it won't go short. I'm just saying it's going to be a more difficult trade. Let's see what happens. Sure enough, it didn't go down. What a coincidence. Or is it? Can you go long? You guys are really getting this pattern down now, aren't you? Inside triggers with divergence, don't go short. All right. With no divergence over here, should go up, right? Tough one if you didn't get pulled back to the fibs. Sometimes they're mean like that. Anyway, hopefully the lesson, at least you don't go short after that. Worst case, missing the long kind of stings, doesn't it? Because you're like, oh man. Yep, it happens. All right, so we ran up. We made divergence ahead of anything else. So it's like, let's see what happens. I'll just push play. Short or not? Yes or no? At the fibs and triggers. If there's no divergence, yes. If there's divergence, you get out. Why would you cancel it? It just got up to the right spot, Bruce. Why are you getting scared? What scared you? I don't. Divergence on what? We're going short. It's red and down and red and down. We're going short at the fibs. What is it that scared you? This is the pivot you're watching right here. The low. No divergence. You got to take the short. Win, lose, or draw. You see it? Guess maybe. I don't know. We'll see. Maybe the yellow dots stop us here. So that's maybe the only downside. So look, if you went short, yeah, okay, so that's good recognition. The large short triggers are still going up, right? Is what you're saying. Right, Brian? So, and again, let me show you the plan because I think it's only fair to go through the plan. On trade number one, again, this is a look that you're going to get sometimes where the market reaches an area and the triggers keep going a little bit, but the small triggers are going down, even though the large triggers are going up. So you may want to take one attempt just in case, since it's at a good area. Because you get a little overrun sometimes, and then they come back down. So you see this? This is in the plan right here, this second link. But it's a little overrun, and then the small triggers are knifing down, and you get your fibs, and then you get a short. But it also has to be, again, so that's kind of an overrun. And then the small triggers are knifing down, and you have fibs. But it still has to be fibs and triggers here with no divergence down here if you're going to do it. Now, the only fly in the ointment is how much money are you going to make on this? Because, again, these large triggers do kind of pull. So if you went short at, let's just call it 27,825, you now have less than 5 ticks risk on the Dow because you had a down bar. So you're only risking 5 ticks. How much is that on the Dow? What's the Dow point? So you're risking a whopping $25 a contract, right? $5 a point. Anyway, we'll see what happens. Huh. That's not so bad, is it? Now, when you look at it after the fact, does it make sense now? No divergence, down triggers, red background, sell the fibs and triggers over here. That's the difference between knowing the rules and thinking you know the rules. Because when you're in the heat of battle, you have to make that choice, right? I will sell the fib because XYZ. Or I won't sell it because XYZ. And, this right here is kind of the, if you don't have divergence ahead of time, usually you get at least one more, and then you can manage it if there's a divergence. Does everybody understand the rules? Down with down and triggers and fibs. You don't always get it, but if you wait for it, you rarely lose. Where do you see this divergence, Jose? So here's your pre-setup, okay? So look, this is your pre-setup right here. Where is there divergence? On the low, I'm missing it. You're talking about this little cyan line? That has nothing to do with your trade setup. The only time that line, and again, I appreciate you saying that because it helps, because I can now know what people see wrong. So let me open up the plan real quick. Again, I appreciate that, Jose. This really helps a lot. That cyan line only counts when you're on the big chart. So if you reach a cyan line and you get below it and then you get above it, no more trades. First, you have to get there. But if it's just a little cyan line on the small chart, it makes no difference. When it's on the big chart, it makes a difference. Is that helpful? So, this little cyan line, sorry about this, is on the small chart. And all it is just a divergence low from over here. It has nothing to do with what's going on now. That was a divergence from way back over here, and it just draws a line. But what you're looking at is, again, the focus is on what did the price do over here? No divergence on this price low, and the triggers were down, and everything was strong, and the large chart didn't disagree. That's all you want, really. All right, here, let's go forward. Let's see if we get a divergence. All right, so there's divergence finally. What are the triggers doing? Super strong? Ignore the divergence? Get to the fibs? Make more money? Cool. Divergence from fibs. Now what happens? No more shorts, right? Right now, I'm just playing it going forward. So this is exactly what market replay looks like at 50 times speed with two charts. It's basically like 1 minute every second, or every, give or take. It's 50 seconds every second at 50 times speed. So it's pretty much 1 minute per second when you're doing 50 times replay. And this is what you guys really need to do. And again, look at your large chart here. We're not going long, are we? Not yet. The small chart said we're done going short. But you can't really go long into that, because, this will usually make it go back down again. It's too strong to trade into. Does that make sense? And this is usually where they'll come back down one more time. Well, look, this is what they normally will do. They'll normally come back down one more time and retest the area. Usually, and it's because it's so strong. Here, let's see if I can blow it up. It doesn't have to, but it usually does. And we don't want to go long unless we get to really a good edge on the big chart, or the big chart agrees. You can see the small chart set up, but that's just short-term stuff. This is the long-term. So we want both of them to line up. So I'm just going to let it play at a normal, the way the 50 times speed goes. Is that okay? And then when it gets to something worthwhile, we'll talk about it. And you can see the large chart on the left. You don't want to fight super, super strong triggers. You'll lose. That's why you're not going long on the right-hand side. So you guys pretty much understand this now, right? Strong triggers, both charts agree, fibs and triggers together, no divergence ahead of it. That's the winning recipe. See how we came down and retested the low over here? That's what they usually do when it's this strong. So it might even keep going. All right. Do you guys want to go look at the real market today and see how this lines up? Yeah. Again, you can see the retest. That's kind of our little, pivot stop out bounce. All right, let's do that. Here, let me close this out. All right, so here's crude oil. And again, we have to talk about when things agree, right? So potentially, this is our termination condition. I sent you a reply, Charlie. I told you, yes, you can use 30 days back on Ninja 8, unless you sent a different one. Or you can just type in your question here. I'll answer it either way. All right, now, strong triggers down. What we're going to have to do on crude oil is figure out if we had some type of trades when it's really strong, right? And then was there anything else? And then obviously now the downtrend is over. So look, let's take a look at our charts and let's see what we have as far as trades go, starting from this morning. All right, termination condition. Mess, 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 mess. Nothing really easy, huh? There's only one time you didn't have divergence where you had your fibs and triggers line up. That was it right there. And that one didn't last long because you ended up with divergence again. Okay, no worries. And then we're going down, going down, going down. Larger chart said down, smaller chart didn't. That's the first time where the fibs and triggers and large chart agree. Right here. That's only the second trade that agrees today. You see the trade though, right? I mean, that's pretty obvious. All right. And then this spot right here agreed, it said, but you had divergence ahead of it. So unfortunately, not a lot of trades. I don't know what you guys have done on crude oil in the real world, but probably not many trades. Huh? Maybe a couple trades, but that's about it. One trade, Rich? Okay. And again, now maybe we've put a bottom in, it looks like. All right. Sorry for not having a lot of trades on crude oil. All right, let's look at the S&P. Here is your day on the S&P. A few swings, huh? So again, let's read the big chart first, and why don't we put them both together? That's probably going to be a smarter way of doing it. And we'll just walk our way forward. All we want is fibs and triggers to agree. I mean, and no divergence ahead of time. Unless you have a number one strong trigger, that's the only time you can get away with it. So let's go back in time. And I think only 2 charts is all you need, Charlie. So again, don't make it too fast, or else you're not going to be able to. If you're just watching and getting a feel for what it's doing, that's a different scenario. If you're trying to trade it and do it, I think 10 times speed is probably all you're going to be able to squeeze out of it. All right, so again, strong run up this morning. This was the high. Now, this is a very common high. And again, if you had a fib here, it'd be great, but you didn't. Notice what you have on the right, divergence. Notice how weak the trigger lines over here are. Usually that'll cause a reversal. You see what I'm talking about? Weak triggers plus divergence, reversal. I mean, it just happens like that a lot. Now, super strong triggers going down. Can you go short at the mid band and the triggers? I think you can make a case for that one, huh? So maybe one long, maybe one short. Yeah, I don't know why you wouldn't. That meets all the rules. Strong triggers down on all charts. So, hey, look, so now we got to support, and again, multiple fibs at support with divergence. Usually that'll make a bottom. Obviously, remember this whole super strong trigger thing on the big chart? Usually you don't make a bottom when they're that strong, which is okay. It's, again, let me show you in the plan exactly where that picture is at, so that way you know how to handle it. I forget which number it is. Oh, bear with me. All right, so here is that exact look in the plan for number 7. Stop when it gets to the fibs. If the triggers get past the fibs and they're strong, keep going. Everybody understand that rule? Again, it's nice when you see the real market and then the rules. Strong triggers, stop at the fibs. If they get past, keep going. So this is what it looks like in the real world. Strong triggers and you get to the fibs, and then, again, that's this spot right here. And then if it keeps going, then you can do another one. What happened before the another one? So we'll inch it along. Again, a little divergence, but this is where you have to ask yourself the question. If you have a little divergence, what's the condition of these triggers? Do you remember the picture I gave you guys? Here, we'll look at it again just to reiterate. Because I think once you see the rules over and over, this is the rule. Super, super strong trigger. All triggers past the fibs. Ignore the divergence. What do you think? Look familiar? That's exactly this right here. Super, super strong triggers way past the fibs. Ignore the divergence. Take your short. Right? So you're going short when it gets back to fibs and triggers. You lost that one. That's okay. It happens. You're going to lose them sometimes. Now, they made a deeper retracement, and where'd they go? I lost them off my screen. All right. So we're catching up. Now, strong up. Again, I would say this is a really good mid-band long one more time, which again, a little frustrating. It didn't follow through, right? Super strong triggers. You're going to buy the mid-band and one-to-one, just like you sold it on the way down, right? You sold it on the way down when it was super strong. The breakout was a fake breakout. The mid-band was great. Divergence takes you out of your trade. Or it doesn't really take you out. I mean, it takes you out of your trade, or your pivot does. But all we did is make it down to the edge where we have all these fibs. And again, remember the thought process here on your, you have to look at your large chart and say, does it make sense looking at my triggers to take a stab at a long trade over here? Again, you don't see it here, but this is where if the market flow generated a long trade, it would make a lot of sense. Instead of talking about it, I guess we could look at it, couldn't we? Bear with me. Let me find that spot. What time is that? 9:46. Let's see what it looked like. At 9:46, there's not a lot there, unfortunately. Yeah, they just kind of ran. There wasn't even a long signal there. Tough, right? Usually there is. I'm surprised that there wasn't. Anyway, that is okay. All right. Moving forward, market went up just a little bit. What did we run into? Resistance. So we're going to have to watch over here. Man, that's really a heartbreaker, isn't it? When you go long here thinking you're going to get rich and then they take out the low and then they run up anyway. What happened at the top, guys? This is our stereotypical pivot stop out with two divergences at the fibs. And that, I mean, how many times have you guys seen that move? More than once? Man, streaky, huh? Not much in the way of shorts, is there? These are the ones that frustrate new people because they're like, goodness, I should be getting rich and I don't have any trades. The market's moved all this way and I didn't get rich. All right. So now double divergence at the bottom one more time. Again, it's the same kind of double divergence pattern at the bottom that causes us to, you know what I mean? See the fibs and then the double divergence. That's usually the trend killer. And then maybe one long trade here at some fibs and triggers finally. Kind of missed by a tick or two, but might be the only spot. Sheesh. That's a whole bunch of something. All right. Where did that end? Okay. What do you guys think about that one? I mean, again, this would have been great if you would have got a pullback into something, but not much. Pivot stop out at the fibs is the top. Not really an easy short trade, sorry. Pivot stop out at the fibs at the bottom. This one actually gave you a chance. Let's see what's happening at the top. All right, cool. This one's a little bit better. We get through a fib. And again, I would think, potentially you're thinking over here, you're thinking, yay, I'm going to go long and we're going to get the breakout, right? I mean, I think that would be a very fair, I'm going to go long right there, right? Don't you think? The only challenge is when it's weak, you got to get out after that divergence. Watch, I'm going to show you the picture. Maybe you don't do it after a pivot stop out. Sorry. But let's say you did it. No big deal. Let's say you did it anyway because it's streaky. I want you to see the picture, see the plan, see how they go together every time. Remember what we said a little while ago, which if it was really strong, we would ignore that divergence. Still got our butt run over for that one, but still, that's okay. I don't mind losing every once in a while when it's right. Right? You got to lose every once in a while to keep you honest. So this is the picture from the plan or from the spreadsheet. Weak triggers with a divergence, you're going to go long anyway, but you have to get out after divergence is true. You see that look right there? So something here, divergence, you're out. And you don't hang on and lose 3 points because that's silly. Is this the exact same look? Something here that says, whoa, and then, I don't know if that's the same spot. Yeah, same spot. And then you're going long, but then it's like, you get stopped out right away. Or hopefully you get your stop pretty tight. Anyway, I think it's a good left or right comparison, isn't it? If it runs, great. If not, you lose a point. And then, look, this is the same pattern, but on the big chart. Pivot stop out at the edge of fibs. Let's see where we went to. All right. So first things first, we're going to deal with, I'm going to call it the first spot here, okay? So we can kind of have a relationship. First spot, and then we start going down. I don't think you get a sell here because the fibs and triggers don't line up. You see what I'm talking about? There's no fibs and triggers lining up here. I don't think you can really justify a short. I think you could justify a short right here because you have a lot better fibs and triggers lining up with each other. You see that? Now, what ends it? Divergence. It's a killer, isn't it? Divergence is a killer. Now, strong move up. Could you take a long trade here? What do you think about it? Fibs and triggers. One shot. I think so. Where would you get out of your position? Fibs. Now, remember what this was up here, guys. I'm going to draw a yellow box so you have contextual relationship, okay? So I'm going to make it yellow because you can't see it here as well as you can see it over here. The yellow box over here, you see what it is? Double divergence, pivot stop out right at the fib, which adds a lot more zip to the top. Yeah, of course, you always check your large chart. So if you're going long into this, you have to really be quick on your feet. It's okay to do it, but it's not okay to hang on forever. Does that make sense? And then we're going down again, and man, we just didn't get anything there either. Now we have divergence and maybe even a couple of them before we pull back. Notice on your left chart where this, here, I'll make it yellow again. Isn't that our pivot stop out of a low down there at the bottom on the big chart? So we get a pivot stop out of divergence. Not only that, we also have new divergence on the little chart, which really puts a kibosh on it. It's a battle in there today. Everything's going up. Do we have a chance? Is there anything that we can do? God darn those stupid markets. It would have been a good long if you would have got a pullback, but you didn't. Here's the big thing, guys. The number one thing about trading with the fibs, with the triggers, nothing hurting your position like divergence or anything in the way. You don't take a lot of losers. You don't take as many trades as you wish you could, but you don't have to. How many winning trades do you need to make $400 a contract? Two mediocre profit trades. So, again, you have to think about two things: longevity. And has anybody ever done 28 trades in a day? I have. Lose your ass if you do 28 trades in a day, don't you? um, yeah, I mean, it just doesn't work because you're trying to do too much. It's like playing World Poker Tour, Texas Hold'em. You can't play every hand or else you're just going to nickel and dime yourself out of the game. So it's the same thing with trading. You have to have capital preservation, number one. Number two, make sure you've got high probability trades where everything is going your way. Number three, make sure you don't have divergence hurting you. And even though you might be a little bored, you're going to have a really good chance of making money over the long haul. And if you can just be patient and sit there and relax and don't do anything crazy, put Hulu on your other monitor or something. Watch TV or YouTube TV or whatever. Watch a movie, read a book, just sit there and relax. Or just stare at your screen and relax. But you got to get used to the idea of just sitting there relaxing. The more you can do it, the better off you're going to be. You just have to train yourself early that you don't have to catch all the moves to make money. You only need a couple of them to make money. How much do you need to start with? Gary, first things first, realistically, you don't need any money to do sim. Let me show you I'll show you all the answers, okay? On this spreadsheet for you guys. And again, look, I put together this daily routine that you guys are going to go through. The first things first, you got to watch the videos, take the classes, you have to learn the right looks for when it's okay to take a trade and not okay. And you're going to have to simulate your trades daily, post pictures in class, get feedback, ask questions, simplify in your brain what your trades are going to be, download replay data, and just go back and watch, weeks worth of trades and when you're going to get in, when you're going to get out. When should it work? When should it not work? Take pictures, repeat process. And essentially, this process, I wrote a little article, just a little blog post of, this is what I teach, and I believe it 100%. This is the most effective step-by-step plan for becoming successful. And take a moment and read that. It's on our little blog. Having the winning methodology, it must be simple. And that's why trend trades with the fibs, with the triggers, without anything hurting you is simple and repeatable. Not saying that there's not other trades you can do, because there is, but all the fibs, all the triggers, nothing hurting you ends up being the best trades. Starting off small. And again, in our plan on page 2, this is how much it costs to trade. So I want to answer your question directly, okay? Gary, to trade one S&P contract to make $400 a day, you need to have a minimum of $500 in your account. So the cost to trade one contract is $4. So to do a trade, it costs $4 in commission. Money on hand in your account, you have to have $500. Now, normally people will allocate at least $3,000 to $5,000 per every one contract they trade. Because you have to think about it. If you have 500 in your account and you lose one trade for $150, you're not going to be able to put a second trade on ever. So, nobody can guarantee 100% success. You could have a couple perfect setups and still lose. So most people will allocate $3,000 to $5,000 per every one contract they trade. You okay with that, Brian or Gary? Just want to make sure your question is answered. To day trade crude oil futures, you're looking at $1,000 per. So gold is 1,000. Crude oil actually is 2,000. Sorry, they raised some of the prices when it got really volatile. So you got to have 2,000 to trade crude and 500 to trade the S&P. Now, the S&P has an added benefit because they released, I don't even know, is it 8 months ago or so, the micro S&P futures. So you could literally trade live money with as little as $50 in your account. So, realistically, you could start with $300 to $500 and trade one micro contract. So you could take a zero off of this if you wanted to. And again, it doesn't really matter because you're not going to trade live money in the beginning anyway. You're going to trade on sim, you're going to practice. More important than that, and again, I've got this in the videos and things of that nature, but what you have to do is you have to fill up the spreadsheet. So on this spreadsheet, which you can get from page 2 of the plan, I made some videos for you guys. I made some videos of some very common mistakes that everybody tends to make. So if you guys, these are all like 1 to 4 minute videos on that spreadsheet if you want to watch them. On the spreadsheet, I also put the steps. I also put, when you guys are posting in charts, what do you need to write on your chart every day for class? I want you to annotate your chart and tell me what the heck it is you were thinking. I'll help you out. There's also links on that spreadsheet for how to do market replay on NinjaTrader 7, how to do market replay on NinjaTrader 8, how to roll or make new contracts or different contracts if you want to watch different markets. On that spreadsheet, it also has some pictures for, these are all pictures from our trend trade video. And then there's divergence pictures and some thoughts for studying different thoughts on divergence. And then some different fib and trigger line reading thoughts and exceptions and nuances where you may want to study through some of those. And then this is when you're going to stop doing 5-1 trend trades, which I've simplified it for you in the trading plan and just put these 7 pictures right here. These are the 7 top pictures for when you stop taking trend trades, which you've seen most of them today, right? Hit fibs, fibs with divergence, weak triggers with divergence, all those good things. So realistically, and what I put in here, which I think this is right, to be realistic with yourself on learning to trade successfully. It takes the average novice 4 to 6 months to get down a decent potential to start winning some money. So I'm talking about simming for 2, 3, 4 months, going back on, then going back off, then going back on again. About 6 months before you start making money. Don't you guys think that's realistic? Usually a year to get good and at least 2 years to get really great with our software. So it's not a get rich quick. There's work involved, but you got to answer all these questions. When are you going to trade? When are you not going to trade? Where are you getting in? When are you getting out? Why are you getting out? What's your stop? When are you going to minimize your risk? When are you going to take your money? And you can't really answer all those questions until you've seen it work enough times that you feel comfortable with it. And watching the live market's great. I mean, you're going to get, 4, 5, 6, 8 trades a day usually. But if you do market replay, you can watch a whole week's worth in a couple hours. And don't you think seeing a whole week's worth of repetitions would be more advantageous than just a couple of trades a day? Especially if you're new. The more reps you get, the better off you're going to end up being. So that's why if you're not doing market replay and you're not taking pictures, you're not really doing everything you can do to help yourself. And, we've got a slew of videos for you guys to watch too, right? So there's a lot of education. It only took us a mere 23, 24 years to make it look easy. So if it's not easy to you in a week, don't get frustrated. It took us 23 years to make it look easy. So it's going to take you 6 months for it to be easy, okay? So just don't trade live money first, because everybody who trades live money before they know what they're doing ends up losing, and then they get frustrated. So that's my only bit of advice, which I don't give advice, but trade live yourself. You can by following the rules and doing what the software says. That's the secret.